With so many benefits and ways to maximize points on credit cards, it's interesting to see the history and where it all came from. It was only in 2016 when Chase revealed the Chase Sapphire Reserve, a premium credit card with insane benefits and 100K welcome points, along with a high annual fee of $450 when it was released. Just a reminder, thanks for watching this video. I'm trying to get to 1,000 subscribers and it would mean a lot if you subscribed. Alright, let's get into it. They received more customers in 2 weeks than they expected in an entire year. More than half the card holders were under 35 years old, and people were so excited, not only because of the bonus points, but the travel credit of $300 a year covered most of the annual fee, leaving only $150 to pay the card. The card was so popular that they ran out of the metal version. Due to the intro bonus, Chase lost hundreds of millions of dollars in the beginning. In 2018, the average income of the reserve holder was $180K. The average annual spend per year was $39K, or a little over $3K per month. So in contrast to that, in 1935, the first airline credit card was released. This first air travel card was only valid for American airline purchases. Eventually, 17 other airlines began accepting its payments. I was always perplexed why airlines specifically had such a chokehold on credit cards. I get it, it's expensive, but I feel like there's something else to it. There's a lot of things that are expensive that aren't synonymous with credit cards. Every time I get on a plane, at the end, they are either thanking their credit card members of high status or walking around with credit cards to sign up for. This first airline credit with American Airlines went really well. You couldn't earn points or anything like that, but cardholders did receive a 15% discount on airfare purchases charged to the card. If there was a $500 fare on the air travel card, you'd receive a discount of $75. With Chase Sapphire Reserve, you get 5x points, which is about $25. If you do redeem it for travel, you increase the value by 1.5x, making it around $37 of value. There is a difference though. A $75 discount isn't all the perks that there was. Back in the day, it wasn't as easy to book a flight as it is now. You had to call someone or usually go in person to book your flight. This is why travel agencies were so popular. You'd have to reserve a seat on the phone and go to the airport to pay by cash or credit. Credit cards made it so much easier to do over the phone. Travel agents also made it easier. This way you didn't need to do it, but it was more cost effective to go without them. So if you had a credit card, you definitely had a better chance to do this on your own. Now, these airline cards weren't the first credit cards that ever existed. Credit has existed since civilization has formed. I'm not looking into ancient credit cards, written credit, or even something like loan installments that were really popular before credit cards came about. I'm skipping to the present day credit cards that we know and love. The first true credit card to me was Bank of Americard. There was a predecessor, Diners Club card, but you had to pay the full amount at the end of the month. There's no 25-day grace period. It's classified more as a charge card. So the Bank of America's credit card, Americard, started with 60,000 residents in Fresno, California. Back then, they did credit card drops. One afternoon, residents were surprised to see credit cards in the mail. No paperwork, no sign-off, no application to see if you're qualified. It was simple, for better for worse. Many kept them in the drawer and never used them. The credit limits ranged from $300 to $500, and floor limits ranged from $25 to $100 before the merchant would have to call the bank for approval. Merchants accepting the card would pay Bank of America 6% plus $25 a month to lease the machines used for the credit card transactions, called imprinters. Recently, there was a New York Times opinion piece about how evil credit cards are for small businesses. They claim that the 6% being taken away nowadays is too much. However, originally, shop owners of small stores were more than happy to sign off on 6%. One owner of a drugstore was so elated to see credit cards come and couldn't wait to sign up. He had hired 3 bookkeepers handling 1,000 to 1,500 accounts. and would send out monthly reminders. With the cost of postage, labor, envelopes, and the whole deal, it was dragging him under. Store owners that accepted the credit cards were basically handing over that headache and making the focus solely just the business again. On the flip side, this would make it easier for consumers as well. Instead of having multiple installment loans or payments to make, you can make multiple purchases on one credit card and just get one statement instead of multiple statements at the end of the month. Albeit it is more expensive, it also leads to less headaches for the consumers and merchants. 1 year later, after the drop in 1958, almost 2 million cards were put into circulation all over California. Many sent back their cards or kept them in the drawer. What went terribly wrong was assuming that only 4% of people would fall behind on payments, not 22%. They didn't even have a collections team. Not to mention, fraud was rampant. People would steal the cards from the bank itself when they are fully embossed, and they understood that the floor amount was only $25 to $100, so they'd make small purchases that went undetected by the bank. A few months later, they had found that they had lost $8.8 million in the credit card program, with $20 million lost, including advertising and other costs. Williams was the person who spearheaded the campaign, and he was practically lampooned. He was told to get the heck out of there. He could not head it anymore. They needed to go into a different direction. They did have talks about whether to hang their hat in and not be in this credit card game anymore. Bank of America ultimately decided that they were going to clean up their mess and continue on. They solved immense problems and continued business. In 1960, they had $59 million in sales and $400 million in sales in 1968. Profits skyrocketed. They were profitable by 1961. In 1965, Bank of America gave a woman a credit card to live on it for a month as a public stunt to prove how useful credit cards are for everyday purchases. In turn, Visa paid 3 members of the U.S. Olympic ski team to use debit cards exclusively for a year. The short story of how Visa even formed starts in 1965 with a man named D. Hawk, who was 36 years old, living in Seattle, unemployed with 3 young children and a wife. He got a job licensing Bank of America cards for 3 years and eventually flew out to San Francisco for an opportunity of a lifetime. Him and his team were asked to help clean up the mess that Americard had. There were so many unprocessed transactions, customers to bill, and the systems weren't organized or efficient. He and his team founded a program with a distributed, decentralized network that worked really well. Eventually, it came to be known as Visa, and they had the first electronic transaction authorization in 1973. Hawk led the Visa team until 1984. Things really picked up steam. And in 1970, there was an unsolicited credit card act, stopping credit card drops from happening. A few other important credit card bills were passed, making it more regulated and fair. With these things set in place, they boomed in the 80s. For example, the Platinum Card by Amex was released with a $350 annual fee, which is $695 today with inflation. It was an aspirational card for 24-hour concierge service, travel insurance, and access to private clubs around the world. At this time, Discover went in the opposite direction, creating a free card for the masses. In 1985, the first Discover credit card purchase was made at Sears in Atlanta, Georgia for $26.77. Discover launched nationally in 1986 as the first credit card with cashback benefits and no annual fee. It was introduced at the Super Bowl game ad campaign. The cashback was usually used for the monthly statements at the end of the month. The percentage cashback ranged from 1% to 5%, just like what we see nowadays. They did have limits, obviously, for cashback, so it's not unlimited. Given this history, I wonder how it'll continue to evolve in the future. In the beginning, only 22% of people carried over payments month to month. Now, it's at a record high at 51%. Do you think this number will continue to go up, or is it time for more regulations to be put in place for people who maybe can't afford credit cards to protect against themselves? That monthly interest increase makes it hard to pay off, They are profiting off of people not paying monthly, and I just wonder if people should have more resources or have more protection. Thank you so much for watching. I hope you enjoyed this video. Please give it a like. Feel free to comment what you found the most interesting, or if you have any fun credit card facts to share. I'll catch y'all in the next one.